Hello and welcome to episode 39. This week we reveal who won the battle between the two robotics companies, ABB and Teradyne. We have a portfolio update from last week and we battle two more stocks against each other with this week's theme of digital document companies. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. Last week we looked at robotics companies, and since they'll undoubtedly be our mighty overlords in the future, I really hope we picked the right winner. Fortunately, the loser wasn't Skynet, so hopefully we'll be okay, but this week's winner was Teradyne.
3, 2, 1, go.
Last week had been a pretty good week for us. Although the Battle Royale was only up 0.1%, the benchmark was up 1.3%, which was lovely to see. This week, however, normal service resumes, pretty flat everywhere and even minus in the income generator, down 1.3%. This week's biggest movers show the two classic most volatile stocks, Reddit and Black Rifle Coffee, up 17.7% and down 10% respectively. A couple of other nice climbers, AMD and YouGov, going in the right direction. Not a huge amount of change in the total value of the benchmark. Wait, no, the Battle Royale, that's where we are. On the beach, still at the top, followed by Tesla. I'll quickly run down a few. TriStel, doing well for us. Microsoft, ever stalwart. That's looking pretty good. The Nasdaq up 4.3 since we invested in that. Berkshire Hathaway ticking over. That's relatively flat. On the negative side, Marshalls, I think that was our gardening company, not looking good. Adidas looking bad after having done quite well last year. Expedia down 17%. And right at the bottom, we've got Reddit minus 24, Dick's Sporting Goods also minus 24, B&M and Black Rifle Coffee. Which takes us to a total of 36 holdings. There's 18 now that are making a profit, but 19 that are costing us money. Checking in on the income generator, we're now getting dividends of £29.46. That's up from 28.21 last week. The next payout in June is going to be £10.26. Lovely to see that double figures. And in September, £6.31, which means our next payout is at the moment £16.57. We've now added £925 to each of our three portfolios, and last week things were looking pretty good. Battle Royale in the green, up 2.3%, the benchmark 0.4%, so we were beating the benchmark, which is always very, very pleasing. This week, not quite as good, unfortunately. The Battle Royale still up 1.4%. Still happy with that, to be honest. The benchmark is up also, but only 0.2%, pretty flat. But after all the volatility, I will definitely take that. Overall, that means that into our three portfolios, we've now invested a grand total, or rather the value is a grand total of £2,739. That's £12 profit, and there are £71 in dividends coming our way.
3, 2, 1, fight.
If robotics is the future, then signing documents electronically and manipulating PDFs is definitely the present. My present, at least. There are two main players in this industry, if we can call it that, DocuSign and Adobe. And I genuinely don't think a day goes by where I don't use one or the other. Of course, that just goes to show how exciting my life is. I also think that industry is going to be around for a while. Everything's just getting more and more electronic, and contracts and documents still need to be signed. So I think it's a good spot to invest. And those are the two companies to choose between, in my opinion. So why don't we have a look? I think that anybody who's signed an electronic document in the last 5 years have used DocuSign. Basically, it's just how you sign paper online, but it does it in a secure way. And obviously that is the way of the future in business. Taking a look at the company as well, it is a tantalizing prospect, being 27.4% undervalued, trading at 13.7 times the PE ratio. Not so applicable for software companies, but it's got a 5 times price to sales. Does that value mean anything if it's not going anywhere? No. And according to this, the future growth does not look particularly impressive based on the past. However, I'm not sure if that's completely fair to go by, because if you have a look at this headline, the earnings have grown by 931.9% over the last year. And if you look at some of the other future growth metrics, if nothing else, our lovely little earnings and revenue growth forecasts, which are trending in a nice upward direction, and knowing what we know about the industry and this company, I think it definitely does have a decent future. Forecast annual earnings growth is apparently -24, but if you look at the revenue, that's still trending up. So one to be aware of and think about, but I see this going up in the future. No dividend to speak of, which is probably good when you're looking at that growth, because you want them to be focusing on growing the company and keeping things ticking over. Right, so that's going to be compared to Adobe. Now, if anyone doesn't know Adobe, it similarly dabbles in online documents, but this is more to do with editing PDFs and sort of practical document manipulation. They do also have a flagship product called Creative Cloud, which is what I'm talking to you from, where they help content creators put together packages like the one you're watching. So Adobe does have a few additional strings to its bow. According to Simply Wall Street, it's undervalued by 35.6%, which is pretty impressive. Is it going to go anywhere? Although let's, before we get to growth, trading at 23.4 times the PE, which is more expensive than DocuSign slightly, and as is the price to sales. But again, take that with a pinch of salt for these electronics companies. Future growth. Now, Simply Wall Street does think that that's positive, 9.3 and 10.6. Nice steady little upward graphs and relatively similar forecasts from the analysts. Financial health looks pretty solid. This is a company with a lot of money sloshing about. Also doesn't pay a dividend yield and has a slightly higher buyback than DocuSign does. Nothing else major to report. Neither company, looking at the future on the little snowflake, neither company, according to Simply Wall Street, has a massive future. But again, I think that's got to be taken with a pinch of salt. With DocuSign in particular, looking at the earnings growth, I think these both have a great future. So I think this one comes down to which company you know better, which one you prefer, which one you think has the better future and is the safer, healthier company to invest in now. Would love to know what you think. So there we have it. Which one do you think we should invest in? As usual, pop a thumbs up in the comments next to the applicable company. That's the one we'll invest in. And from my perspective, my vote's going to go towards It's been an incredible heat wave in the UK. We've been loving it. We've been enjoying being outside and not looking at our stocks and shares for a change. Hopefully they've still performed well while you've been away. And I hope you have a wonderful week investing in the market. We'll see you next week.
Goodbye.